Ooh, that picture looks terrible. Can we hear the music on stream? We cannot. Is that any better? Hey Google, turn on office lights.
Something's not right. If it's still like this in a few minutes, you can try troubleshooting in the Google Home app. You can also try unplugging your device and plugging it back in.
Alright, so we do have some music. Not too loud. Alright, let's turn it back on and we'll get started here. Let's turn it down a little bit. Turn it up here. Okay. Try this music one more time. Alright, that doesn't sound too bad. Let's get started on this. So, we are working on building from scratch a Bitcoin automated trading strategy. Pretty straightforward. We're using Tradingview. We're using Pinescript, the language built in Tradingview. And let's see. We're going to open up a brand new trading strategy. Gives us this nice little window right here. So we're going to be doing a dollar cost average strategy, which is pretty popular in the crypto universe. A lot of people think crypto has a lot of room to grow, and therefore that means people want to buy it. You know, the price is going to go up, and that's kind of what dollar cost average is used best for. Essentially, you're going to buy a specific amount of Bitcoin in this case, and then if the price dips or it goes lower, then we are going to buy more, essentially averaging the initial cost of your position in hopes that the position will increase eventually. So most of you, I'm sure you are aware that crypto has been on a heater, especially Bitcoin recently. Holy cow, look at these last couple days. Last 3 days we're at a 20% gain, 25% gain if you count the high. Even more than that if you count just the low of last week. Alright, look at that. 27% right there in 4 days. That's pretty wild. If we were dollar cost averaging, you know, let's say we entered the market over here. Say we entered the market over here. Maybe entered again right here on this dip. Maybe entered again right here on this dip. You know, we'd be in a pretty good position. So, anyways, we're going to start with the strategy. Relatively straightforward. But first we need to decide how we want to enter the market. Kind of the base order. What signal gives us a base order? We can use this built-in one right here. So this one is using the 14 simple moving average and the 28 simple moving average for both the opening and closing. We can actually plot that on the chart just like this. We're going to go SMA1 equals TA.SMA close 14. And we'll do the same thing for the second one. SMA2 equals TA.SMA close, and this one is 28. Alright. And then we just go plot SMA1, give it a color. This one's the faster SMA, so I'm going to put it color green. And then this next one, I'm just going to change it to SMA2, and we're going to give that a red color since it is slower. Alright, and then we are going to, let's title this script. I'm going to call it, oh, that's what I want. Bitcoin DCA strategy. If I could spell, that would be wonderful. Okay. So back to the Pine editor. Now we're going to add it to our chart, so we can actually see what's going on. And now that we add it to the chart, we can actually see where this strategy is taking entries and longs and shorts by default. We see when you have a crossover of the fast SMA and the slow SMA. So when the fast SMA crosses above the slow simple moving average, we take a long trade, long condition right there. Reverse, when the fast SMA crosses under the slow moving average, we have a short entry. And we can see that here on the chart. Green is fast, red is slow. Right here, green is above the red. Green crosses below the red. It crosses at the close of this candle, and therefore the entry occurs on the opening of the very next candle. And then we are in a short trade. That actually would have been a really good short trade. Look at that. All the way down here. Entered right here. And we exit at the next long signal, which had a bit of a retracement. We could have exited way down here. But we exited right up here for a nice 9% profit if we took that trade. So not bad. We'll use this as our base entry signal, just because it's simple, and we can always come back and change this later. Okay, I'm more worried about getting the strategy part all put together. So now that we can visualize that, let's think about how we want this strategy to work. So with a dollar cost strategy, you enter the market, and then ideally you continue to enter the market as the market gets lower. So we're doing long only, right? Because we don't do long and short for a dollar cost average. We're doing long only. So we can get rid of these short entries. But these short entries are the only thing that are exiting the long entries. So we're going to have to come up with an exit condition for when we want to, exit, get out of the trade. Otherwise, we'll just stay in one trade forever because we only have an entry condition. So I'm going to comment out this short condition, or this short entry. And I'm actually going to use the short condition as an exit. So we'll put that back up here, and we will do, you know what, we can actually just reuse this whole thing. The only thing we want to change is strategy.exit. Actually, since this is a conditional exit, we want to use strategy.close. Basically, the difference is strategy.close is great to use on a conditional exit. So this condition happens, and then you close the trade. Strategy.exit is ideal for placing targets, like a take profit or a stop loss on the chart. We're definitely going to be doing that with this strategy, but right now we just want to have an exit so that way we know we can exit the market. So that's why we're going to use strategy.close. We're going to change, get rid of all this, and I always like to open up the reference manual, just so I can, you know, while I'm typing this code out, I can take a look to see what parameters I need, which ones I don't need. You know, it's just a good reminder. Helps me learn these functions a lot quicker. So strategy.close ID, it needs to be the same ID as the entry that we are closing from, which is my long entry ID. Then we need a comment. I don't care for the comment. We'll add a comment. Comment close condition will be the comment. The comment is what shows up right here on the trade. So it doesn't show the ID necessarily. It'll show the comment if you have one. Next is the quantity. By default, we're gonna leave the quantity parameter out, and that just means by default it will close all of the trade. So we don't need any of that. Don't need the alert message right now. We'll add that in once we start doing the automation portion. Don't need immediately. I don't like using immediately. Basically that'll trigger the condition on an intra-bar condition rather than the close. I like keeping everything nice and clean to happen at the close of the candle. Lots of reasons for that. We can go over that whenever. But for now, let's just continue here. Don't need the disable alert, so this should be all we need. And now I am going to save it, and it will update on the chart. And let's see if it worked. I will tell you right now, it didn't work. Don't know why. My long entry ID. These strings are case sensitive, and as you can see, I put a capital D there, like a capital D dummy. Alright, so let's just change that, and now we will save it, and bam, we're in business. Look at that. So we converted this two-way strategy into a long-only strategy. Still uses the same conditions, still uses the same entry and exit points, except instead of going long and short, we're going long and then exiting. Just for fun, let's take a look at the strategy tester on this guy. Now we are testing on the daily Bitcoin, which is a little slow for some people. We bring it down to the 15-minute, which is a pretty nice, pretty comfortable range, which, you know, doesn't look too bad. We had a nice gain, but then it lost all of it. Huge drop right there. Max drawdown 1.2%. And remember, this is only using one unit, so one Bitcoin we're trading, which is kind of a lot. But by default, our strategy is starting with $1 million. If we did this with, like, we're trading one Bitcoin, we're going to need, what, $100,000? You can see that changes things a little bit. 11%. It's a more reasonable numbers there. Alright. That's a good starting place. Give me 1 second. I'm gonna check some emails real quick. grab some water. Alright. Oof. Do not hit the microphone. Damn. Alright, the volume's not too bad. Let us continue. Okay, so we have this long and exit strategy. It's a good start. But we want this to dollar cost average. We want this to enter a new trade every time the strategy, you know, every time the price gets lower. But we want to think about how we want to do this. So I'm going to get rid of the closing part of the strategy right now, and I just want to highlight every time a long condition happens, just so I can see it a little easier. And this will help us figure out, you know, every time this condition happens, we want to do something. So I'm going to go BG color. Long condition. We're doing a tuple here, which is basically saying if the condition is true, we're going to give the background a new color of green with an 80% transparency. Else, if the long condition is not true, we are not going to give the background a color at all using NA. And throw a parenthesis on the end of that guy, update it, and now you'll see we're going to lose all the exit conditions, and now we're going to see all the entry conditions. So the reason why I got rid of this exit condition was because it was happening too quickly. Ideally, with a dollar cost average strategy, we want to exit after a specific percentage profit. So we can actually put that in right now. Since this is kind of like a take profit level, we're going to use strategy.exit. So we put in the function right there. We give it, this is its own ID, its own exit order is going to be DCA exit. From entry, this is where we specify which entry we are exiting from. And so we give it the ID of our entry ID. Quantity, we're just going to leave that blank again. Quantity by default is 100% or all of the trade. So we'll leave that blank. Quantity percent, don't need that. What we do need is profit, limit, loss, or stop. Those are the take profit and stop loss levels. Now you can tell, like I just said, there's 4 of them: profit, limit, loss, and stop. We only need 2 of them. Actually, we only need 1 of them because we're only exiting when this trade is in profit. Now the question is, do we use profit or limit? Me personally, I get these 2 confused every single time I use it, which is why I always pull up this handy dandy reference manual so I can take a look and figure out which one I need. So I want to exit the trade when the average cost, or when the price is X percentage more than the average cost of my strategy, of my trade. So we have, there's a few parts to that. Let's just write out the logic first. This is going to be a price level. So we're going to name this variable exit level equals, I want the average cost of my entry, so that's going to be strategy dot position average price, and I want it to be 5% more than this for now. We will make this a variable later, but times 1.05, right? So times my average price times 1.05 is going to be 5% more than what the average price currently is. If we did average price times 1, that just equals the average price. So we're going to add 5% to it, which is where that 0.5 comes in. And now I want to use this exit level here in this strategy.exit function. Now remember, we need to figure out if we're doing a limit or a profit on this strategy.exit. We can read what it says. Profit target specified in ticks. That is the profit parameter. Or profit target requires a specific price. Now, exit level will output a specific price, right? It's going to take the price of my entry, multiply it by 5%. That is going to give a price level, not a ticks level. I could convert this into ticks. I could say like my average position minus 5% more than my average position. That would give me the difference, and from the difference I could figure out the ticks. But since I already have it here in a specific price, I can just use this limit parameter. Limit equals exit level. And just for fun, I'm going to plot exit level on the chart so we can see what it looks like. Plot exit level, give it a color equals, we'll do orange. Just so it's nice and obvious. So now that we added this, this is what should happen. We have an entry condition whenever the green line crosses above the red moving average. We will exit that trade whenever the price reaches our position price times 1.05 or 5% higher than our average entry price. And then we will plot that level onto the chart so we can see where it is. Now remember, we're not adding any filters or anything to this exit level, so it will exist 100% as long as we are in a trade, because this value is NA, or this value doesn't exist when we're out of a trade. So this should only plot the level while we are in our trade. And we're going to save it and update it, and then might get an error, we might not. Things might work as we expect. Very often they don't. So let's see what happens. Okay, we have this orange level here, so that's a good start. The issue is now I don't see any trades. My instinct is that we just haven't reached this price in a really long time, and that's why we're not getting any trades here. And it looks like that is that my hunch was correct. So look here, we have a long entry right there. I'm going to measure that. This is going to be about 5%. Right on the dot. Oh, I can't get to 5. That's okay. 5.01. We can see right here in this box, distance from my entry to this line, 5.01%. It's actually going to be 5, but I need to zoom in to get a little more precise in my mouse skills. But we have 5%. So we can see once price hits this level, we expect an exit, which happens right there. It exited right there at that level, right at 5% from this entry. Now, what's nice about this is, since we are only exiting a trade when we are in profit, if we go to the strategy tester, we're going to be winning 100% of our trades, right? Because every trade is ending in profit. Bam, look at that. 100% profitable on 12 trades. That looks beautiful. But this is where DCA strategies kind of can kick you in the butt. And that is what happens when the price doesn't go higher. That happens a lot. Sometimes, things hit a peak and they only lose value from there. They don't come back up. This can happen in, stocks. It can happen in Forex. It can happen in futures. It can definitely happen in crypto. There's plenty of crypto coins that blew up back in 2020 and have died since then and have never reached those levels of profit again. Those trades, you would just hold on forever, right? Because we don't have any exit conditions. There's nothing here exiting the trade. Once, the only thing exiting it is when it's in profit. If it's not in profit, we're never going to exit. And we can see that on display right here. So we have this long entry, and we have our take profit limit, our take profit level set to 5%. We can do a quick measurement here. Right there, 5%. I think I measured it off just a little bit, but 5%. Bam. But as we see, we haven't hit that 5%. It's just bouncing back and forth. It goes a little lower over here, and then look, we finally hit it right over here. That trade took a long time to complete. We were holding on to that trade for almost 2 weeks, 12 days. That's kind of a long time to hold a trade. But that's the drawback of using a DCA strategy. Look, we even have this one over here. This one looks even longer. We entered right over here, and we exited right over there. We exited in profit. We made money on this trade. It just took 35 days to do it, 34 and a half days to do it. That's a long time. And some people, they're not that patient. So while this isn't quite a dollar cost average strategy yet, this is the structure of how it works. We enter the market and we exit the market when we're in profit. Now what we want to add is we want to continue adding into the market every time we get a new dip, every time we get a new low, And that new low is going to bring down our average price. Because when we buy in over here, let's say we, let's do where are my arrows? Drawing. Okay. Let's say we buy in right here. Our average price is going to be right here. But if we buy in down here, then let me retry this. If we buy in down here, this is going to decrease our average price by the difference of the volume of the trade and the distance between the two. So if we just do another single 1 Bitcoin entry, it will be half the distance between these two, and about right here. So if it lowers our average cost of the trade, that will also lower the distance to get to 5% profit, because now it's 5% of this new lower average, which is going to be a little bit lower, like over around there. So that's kind of how a dollar cost average strategy works. So let's start by building out that logic. Before we do, give me 1 second. Move all these. Okay. Alright, so as you can see, this strategy is super simple. This whole thing is written in 31 lines, even less if I wanted to clean it up. Get rid of all these spaces, get rid of this code that we don't need anymore. Some of this code is not even necessary. But I like to space things out just to keep things a little clean. We got 22 lines of code. And we've already got a 100% profitable strategy. Let's go back to today. Okay. Oh, look at that. We would have had an entry just a couple minutes ago based on the strategy. Could be making money right now. Alright, so we need to add in rules to continue to add into the strategy. There's a few things to consider here. First thing, we need to add a new parameter in our strategy function. And that parameter is... Anyone know? Anyone know? If I could read, I might be able to find it. Pyramiding, there we go. Pyramiding is a function that allows us to trade more than one contract at a time. In this case, dollar cost average, I still want to be able to, control within the settings how many trades we can take. So what I have to do is set this pyramiding to a value that is not going to be reached. I just set it to 999. And now this will allow us to take up to 999 trades in 999 independent trades. Otherwise, you would only be able to take one at a time. So like you can see here, we have a long entry right here, and we take that entry. Now we have another long entry right here, where the green moving average crosses above the red moving average, just barely, but we have it highlighted, so it's happening right there. But we don't get another entry, right? Now pyramiding allows us to take another trade right here, because we can take up to 999 trades. By default, you can only take one trade, which is what you're seeing. We have one trade, and then it has to exit that trade before it can take any other trade. Now, of course, I don't actually want to take 999 trades at one time. At least that would probably bankrupt me. What I want to do is have a custom input to say how many I can or can't have. So we're going to do pyramid equals input.int. This is an integer. We're going to set it to 5 for default value. Title is going to be what do I want to say? A lot of people use the term safety trades. I don't know if I like that phrase. Let's just call this, we'll just call it safety trades. It makes sense. Most people understand what it means. And for automation, it uses the same language, just like something like 3 commas will do. We don't need to add any options in. People can theoretically choose any number. We could use the max val just to be explicit. Is going to be 999 because that's what we have this pyramiding set to. So if you tried to set this above 999, it will not let you using this parameter because that's what this is set to. And that's our global maximum here. We're setting like a local maximum. All right, so now that we have this variable, now I can say, if I save this right now, we haven't really changed anything. The only thing we changed is that I can take up to 999 trades at a time. And so when I save it, here, we'll show you what happens when I do that. When I save it, you will see every single long entry gets a trade. But I don't really want that. Look at this one. Look how many trades we had here. It's like 1 billion trades. Between the original entry right here and this exit right here, that's way too many. I don't want that many trades. And a lot of these trades are entering higher than the original, which is also not what I want. I don't want to average up into a position. I want to average down into a position. So what I need to do is use this pyramiding function, and I need to set this as part of my entry condition. Right? Actually, I'm just going to simplify this real quick. Since we already wrote these out into variables, I'm going to change this to SMA1 and this to SMA2. Just to clean it up. So now to add this into my entry condition, I want to take a new long trade as long as my current position size is, right now we're just using one position by default, one unit of trading, whatever asset you're on. In this case, it's 1 Bitcoin. If you're on the Euro USD, it is 1 euro. If you're on stocks, say you're on Apple, this would be 1 Apple stock. We're using 1 unit. So as long as my position size, so we're going to go and strategy dot position size is less than my pyramiding that variable, then I can enter more trades. If this condition is false, if my position size is greater than the pyramiding, then this whole function, or this whole argument, results to false, which means long condition will not trigger and a new trade will not enter. So we can predict what's going to happen right here. My pyramiding is set to 5, so once my position size reaches 5, we will not see any more trades. So here's 1, here's 2, 3, 4, and 5. This will be the last trade on my chart, and it will stay there until it exits. Let's see if we got this right. Bam! Look at that. I can predict the future. I don't know if you know that, but check that out. 1, 2, 3. We have 5 trades. No more trades happen, and we can see. Remember we're doing this BG color, this background color for the long condition. We can see even those lines stopped because our long condition is no longer true as long as our position size is greater than our pyramid, or equal to, I guess, in this case. And so now we can see this trade will exit once it hits that take profit level that we set, which is 5% greater than the average position size. One thing we can plot too, let's just plot that value because I think it's helpful to visualize. So we're just going to plot strategy dot position average price. We're going to plot this in blue. Plot this in a style. Plot style line BR. What do I want? Yeah. Yeah, I think that's all I want. I'm actually going to copy the style over here. This style, so I said earlier, remember the exit level will not plot as long as the strategy position average price is as long as we're not in a trade. So we can see we exit a trade right here. Move this over. Exit a trade right here, and then we enter a trade right here. So between here, this orange line should not be plotting, or at least we don't want it to plot because it doesn't exist. So what's happening is it exists right here, it exists right here. By default, it is connecting those two lines. By using the plot.style line BR, which means line break, we can highlight that and see it. Plot.style line BR, name constant for the line with breaks style. We want breaks. We don't want it to fill in this spot. So we're just going to update that real quick, and you'll see that line will disappear. And also, we have this new pretty blue line plotted on our chart. This shows the average price of our strategy or our trade, right? So we entered right here. The price is way up here. Let's zoom in a little bit. So we enter the trade right here. Blue line follows, and then we enter the trade way down here. Now remember, it's not going to come all the way down here because it's the average price of this position and this position, which would be right there in the middle. And then look at that, we buy right there around the average, so it increases it a very tiny amount. You see a little boop boop difference between that and that. Increases it a little bit, but not a whole lot. And then we buy again way over here, really close to the profit. Look how close we got right there. We almost hit it right there. But then we got another entry signal And that jumped up the average price a lot. And remember, when it jumps up the average price, it's going to jump up our take profit target, because our take profit target is based on our average price. And then we bought higher again here. And so remember, every time we buy higher, it's going to increase our target, which isn't necessarily bad, but it's not really what we want here. And you can see price came all the way back down to touch our average price. That was a long time of not doing anything, just bouncing back and forth, came all the way down here. So we were in profit this whole way, right? Because the price is above our average price. But at one point, it came all the way back to even. After holding this trade for like a week and a half, only for it to come back to zero. That kind of sucks to see. But if you waited it out another week or so, bam! Look at that, jumped up and exited all 5 of our trades. I'm saying 1, 2, 3, 4, 5 trade exits, -1 for each position, and we made 5% on that total trade. Again, we can look at our chart. We have 100% profitable, 43% closed trades. It counts each trade individually. All right, that's a pretty good start. Now we want to change our logic, so that way we don't want to buy higher. We only want to buy below our average price. We only want to bring it down. We're averaging down into a position. We don't want to average up into a position. So that's what we're going to tackle next in just a moment. All right, let's continue. So we want to only enter positions when the price is below our average, our average price. All right, let's go back to our editor. How are we gonna do this? If we want to filter out our trades even more, right? That's kind of what we're doing. We're taking less trades, so trades only occur when the price is below our average. Simple enough. All we have to do is add that condition onto our long condition, right? Because when this long condition is true, we take a trade. And so if we want this to be true only on specific circumstances, then we just add those circumstances to this long line of conditions. So we're going to go and we want to write this as when the close of the candle, because strategies, everything triggers on the close, is less than or equal to the strategy dot position average price. Right? So here's what we're going to see once we update this. We have this condition, which is our base condition. We might need to change this a bit, but let's see if it works. I think it will. Problem we might run into is we might screw up our primary entry condition, because the close, if this is NA, I'm not sure how this whole thing's gonna read out. But after our initial entry condition, this makes sense. We only want to enter a trade when the close of the candle, when the rest of our entry condition occurs, and the close of our candle is below our average price. So let's enter. Okay, so it did what I thought it did, or what hoped it wasn't going to do, but thought it might. We ruined our main entry condition, because now this condition is never true, right? It doesn't happen at all. If I go strategy tester, nothing is showing up. And that's because this is never true. This can only be true when you're in a position, when you're in a positive position, right? When you have no position at all, this is NA. And if this is NA, then this whole thing is NA all the time. So we need to change this. So let's do this. We're going to give it some parentheses, and we're going to throw in some more logic in here. So when the close is less than or equal to strategy.position average price, or we're going to say when we're not in a position at all. And we say that by strategy.position size is equal to 0. Equal to 0 means there is no position currently open. You are flat, you are level, you are even at 0. You have no positive trades, you have no negative trades, you have 0 trades. And so by saying this, now we're saying all of this has to occur, right? A crossover of the simple moving averages. A position size is less than our pyramiding, so we've only taken less than 5 trades, and one of these two conditions has to be true. This condition will be true when no trade is currently active, and this will be true when we are in a trade, right? When the position to average price is not NA, and when our close is less than the average price. So by adding this logic, and I put parentheses around this just to kind of clarify, because logic can be tricky. I've seen all those Facebook puzzles that people like to answer incorrectly on. This is just logic. So when one of these two conditions are true, this piece of the condition resolves to true, and when this resolves to true, and everything over here resolves to true, we get a long condition. So now, once I turn this bad boy on, once I save it and add it to the chart, we should see our entry conditions come back. Look at that. It's like magic. And also look at that, because we filtered out our trades that were up here above the moving average, or above our average price, we actually got an exit right here that was actually a lot shorter than the other one that was like 2 weeks long, because we actually reduced our average, or our profit level, instead of increasing it by every time we bought more shit. Alright, that looks pretty good. 1, 2, 3. Still took 5 whole exits over here, 5 whole trades over here. You can see we got a bunch of them here early. Let's see what this trade looks like. Let's play around with this guy. So we entered right there. We exited right over here. I want to see what this looks like if we increase our safety trades. Let's bump it up to 10. Okay, so you can see we bought a whole lot more, but we bought a lot here in this big ranging period, which isn't great. It lowered our average price a little bit. You can see step by step, and it went from up there to down there. So we do have a lower price, which means we should exit a little sooner. Looks like we did. We exited over here instead of exiting way up here. Now we can add even more. Let's say we want 20. I want to see if we can buy into all of this down here. Okay, we're getting there. We can see it's lowering the average cost even more. But remember, we're taking a lot more trades. Let's see if it... Oh, there we go. This would have been a good number. We're buying here at the lowest point, and we would have exited way up there. It took us 30 whole trades to do it, but we did it. Now, of course, most other trades don't actually get all the way up to 30. This one's probably got like 10 or 12 or so. This one happened real quick. Was that 2 trades? But you can see, you can start to get a feel for how that works. I'm gonna bump this back down to 5 just because it's, I don't want 305. No, thank you. Bump down to 5, and I'm gonna go grab some water, and then we'll figure out where we want to go from here. Alright, so we're actually going to be wrapping up the stream right now. There's some other things we got to take care of, but we're going to continue on this Bitcoin USD automated trading bot. Later on, we're going to start adding some cooler features, some cooler colors. Just do some cooler stuff, and then get it automated. We're going to use probably a 3 commas platform just because it's easy, and I'm in the US, so I can't use some of the super easy ones like Binance or Bybit. But we'll get this automated and throw it in our portfolio and just see where it goes. All right, we'll get back to